Hey guys, in this video, we're going to talk about beta, what it is, and how we can utilize it in our trading. Now, what is beta? Well, it's a measurement used to measure a stock's overall volatility just compared to the overall market. Okay. And to do that, we need a number for the overall market. So, for the most part, the S&P 500, your spiders, they're going to have a beta of 1. All right. So if you have a company or a stock that's trading with a beta of around 1, it's more or less going to trade exactly like the market does. Now, what is a beta of 0? Well, 0 is basically just kind of like cash, right? That just means no matter what the stock does, up or down, the stock is always just going to hold its value. It's going to remain unchanged. All right. If we get in between 0 and 1, that's just companies that are less volatile than the market. Okay. So it's not really going to trade with the market. It may trade a little bit inversely. But for the most part, it's just going to be less volatile than the whole market. If we get a beta that is greater than 1, this means that it is more volatile than the market. So if you have a beta of 2 in a stock, all right, let's just say we'll take this stock, for example, here, XOP. This has a beta of right around 2.6. So this more or less means if the market goes up 1%, then XOP will go up 2%. If the market pulls back 1%, XOP will pull back 2%. So that's all that means. It just means that it's more volatile and that it'll move more or less 2 times what the market will trade. Now, what happens when we have stocks that have negative beta? What does that mean for us? Well, what that means is that it's going to trade inverse to the market. So that's mostly your volatility indexes, the VIX, UVXY, VXX. All these have a negative beta, which means they're going to trade inversely to the market. So that means the market goes up, VIX is going to go down. Market goes down, VIX goes up. So when you're utilizing beta for trading, you always have to be aware, are you long something that's also having a negative beta while being long something in the market? And if you are you doing that just to hedge, or do you really just not didn't really know what you're doing and you're just kind of wondering, why isn't this going up with the market? Well, because you have to check the beta. So like Wish right now has a negative beta of 6. All right. So in turn, the market goes up, Wish will go down. Market goes down, Wish will go up. Same with Dash, same with XL and AI. Now, these all change though. So these are not set in stone. So especially on stocks like this, Wish, Dash, XL, these can change and they can change pretty quickly. Remember the big SPAC phase that we had there back at the beginning of the year or the end of last year? A lot of those SPACs had an inverse correlation to the market for a little while there. So one day you would have a positive beta of like 2, and then the next day all of a sudden you have a negative beta. Like, what the heck is going on? It constantly changed. So that's always something to be aware of. In these stocks like this, but more or less your inverse correlation stocks will always be more or less just your volatility, your bonds, etc. So again, just to kind of reiterate, beta of 1 is basically your overall market. Higher beta than 1 means that it's more volatile. Beta of 0 to 1 just means that it's less volatile. Beta of 0 basically means that it's going to be unchanged no matter what the market does. And a negative beta means that that stock will trade inversely compared to the overall markets. All right, so that's all beta is, guys. Take a look at that when you're trading this week. And if you have any questions, let us know. Okay, guys, thanks for watching. Make sure to check us out on our social media. We have attached links to our socials in the description. And we also have a trading service if you're interested. There's more information in the description below.